and we'll do investments. If we hit our target and a little bit farther, we'll do 20. So venture capitalists see a lot of deals. They see a lot of ideas. They see a lot of proposals. And sometimes getting in front of the VC isn't that hard. What's hard is getting past that filter that we all have to have of, should I expend energy on this? Should I put any more effort into this to figure out whether I should put money into it? And that's really what that first meeting's all about, is to introduce yourself, introduce the idea as compelling, introduce the idea that it's worth spending more time on the team. And that's the bigger issue, frankly. So you could submit straight through our website, and it'll wind up on a desk, and probably mine. And the whole idea that I have is it compelling? Is it meaningful? Is there a chance here? You heard some of the references, I think, to the things that different venture teams look for. And a lot of us are looking for similar things, and there's a reason for it. So I really like the fact, and I haven't actually used the word humility very much when discussing VCs before, but it's an important aspect. What VCs are looking for, we're not banks. We're looking to become partners in a business. I do often say, if you're coming to a VC for just money, you're in the wrong place. That's my perception. What you're coming to a VC for is to partner with them. And part of that partnership is an exchange of money or funding. But the other parts of it are the willingness to work together, to listen to ideas, to maybe think about things you weren't thinking about. Maybe it's useful in a different market. In-Q-Tel is all about looking at a different market generally. But most VCs want partners or company management teams or technologists who are willing to think about the thing they haven't thought about yet, are willing to answer with humility, why is this better than the other things? And one of my pet peeves, frankly, is the magic, you just got to believe me, it works. I won't tell you without an NDA, and you just have to believe me. At which point I have to say, well, how far am I going to run down the track when I have 1,199 other business plans? That's not a good answer, really. I'm really looking for someone who's going to be interactive, work with me, and adapt over time. Because really good businesses, my experience is really good businesses, particularly the ones who start out, we get involved with early stage, what they actually hit with is not what they were pointed at originally. And I'll use an example. One of probably our best known investment ever, perhaps it'll ever be, is a small company called Keyhole, which was bought by Google and is now Google Earth. And you can immediately realize it has value. But the market they were after was the real estate market, which is notorious for not really spending money on technology or really picking it up too quick. But look where it is today. And so that was a very intelligent, very flexible management team, very smart technical depth. And that's exactly what we look for, is that hard problem made easy.
Do you want to hear entrepreneurs talk about national security when they come in to talk to In-Q-Tel?
I would say not. In general, I've got 20 some odd years working around the Intel community, and unless you do, I generally believe that I have a pretty good idea as to where your technology will fit in that world. What I want to know is, how's it going to fit with Merrill Lynch? What would Maria or Dov or Patrick think if they were hearing this? Because what I want to know is that a technology is viable in another market or in a big market. The Intel community is generally not a humongous market, but they're very technically savvy and they're very focused on their problems. So the value In-Q-Tel brings is marrying you up with those folks who are maybe spending multi-billion dollars on mapping. What a boon to have a company like Keyhole working with arguably the largest mapping organization in the world. If you're looking at data analytics, managing large sets of data communication problems, mobile problems. Here's a worldwide organization who wants to communicate with a sales force that's located around the world and is very interested in understanding connectivity issues and in intelligence operations. So I think I appreciate the fact they think of us in that way, but I'm more interested in the commercial markets.
Okay, I'd like to invite the audience to ask some questions here.
In terms of team, you guys have all talked about team, and we approach you with our plan, but we know that we have a hole in the team, and we're willing to, will you help us find the right person to meet that one need that we're looking for?
I think that's a big part of what a lot of venture capitals do is bring their talent, that to fill the holes. So usually early on, ventures don't necessarily have a CFO or a general counsel or even a VP of sales. I mean, there's multiple areas of functionality, and you're not expected to have the whole pie right there. And I think a lot of the value out of what traditional venture capitalists do is fill and supplement the team with folks that they have that have had experience in your industry and with those fields of endeavor.
One last question. You talked about proof of concept. We do our proof of concept. We have X number of clients, but we're not making money yet. Is that? I've talked to a number of different people who said right now that many VCs are just looking for the fact that your proof of concept to show that people are actually interested in your product or your service. Is that true, or are we just spinning wheels?
No, I think it all depends, though, on what those people that are either your early adopters or having some level of familiarity with the product, what are they saying? So they don't have to be giving you cash yet, but they do have to be willing to have conversations in which they say, this is where we see this fitting in our organization. Right? Now, very often that conversation will be, we're not going to buy it until it scales. We're not going to buy it until, blah, 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 blah. But I think, the reason that early technologies generally don't make money or early businesses don't make money is because they lack scale. And so I think as VCs, you have to look through that and say, this business is not going to make money for this period of time, but here are all the signs. Here are the signs that the market is really going to grow from here to here. Here are the signs that the early customer data is very, very positive, and here's how customers are using this, and it's very consistent, and. And so I think we can easily look past not making money if all those other sort of signs of percolation are there.
I think your question also really comes down to a question of valuation. So at the very earliest stages, without a full management team, your valuation is probably going to be less than if you were able to attract someone. It'll be more if, for instance, you had a really great guy, a VP sales or a CEO even, waiting in the wings, ready to sign on closing. I mean, I think, if you're, and it applies also to the progress of the product development. So if you don't have customer traction yet, the company as a whole is more risky and it has a lower valuation. So the time that you choose to approach a venture capitalist, you're kind of going to get a quote unquote an efficient market price for what you have. And it's a question of how far can you go without that help to get where you need to go.
I also think there's different size venture capitalist firms. I think sort of Maria and ours philosophy, and if I speak on your behalf, looking at earlier stage companies, and traditionally VCs are coming in at later stage funding. So companies are bigger, they have more parts of the management team, they have revenues. Where we're probably more open-minded because we're focusing in the security space at smaller types of earlier stage deals. So the revenues aren't as important, but certainly the referenceable clients, their feedback are very critical.
Well, and in some instances, that's where we feel like we can help too. So, so we have entrepreneurs that come in, just them, right, with kind of a half-baked but pretty interesting technology. And they don't actually have the deep network of CIO contacts and things like that. And we can sort of set them up with, 10 quick calls or 10 meetings and say, come back in a month. We just set all these meetings up for you. Come back in 30 days, tell us, sort of what that experience was like. And then, of course, we can obviously contact the CIOs that we set them up with and hear it ourselves. But I completely agree. I think, we actually really like to get in. Seed stage, early stage, we think we can add a lot of value there. It doesn't matter to us whether you come in with a fully formed team. It does matter who you are. Right, and how much conviction you have around your own, and how much passion you have for your own idea, what you've done in the past matters, and then part of I think the value that we can add is we start bringing people that might be great members of the team to build around you.
Other questions? If anybody wants to pitch their company, we can play a version of the VC Gong show up here.
Not a
there was a mention of deals involving open source and service organizations. Those are two aspects that kind of the stereotype of, well, if you're open source, why do you need cash? And if you're a service organization, you're making cash from your first engagement, maybe. So my question is, what is it about that type of deal that would be attractive to a VC? What are the characteristics of an open source or a service-based organization that makes it appealing to you guys?
Well, I think I threw out the notion, so I'll take a stab at it and then feel free to jump in. But I mean, there's plenty of examples of successful commercial companies that have been built around open source technology. SourceFire, right, is sort of one. There's a company that we've invested in called Opteros. The guy that started Viant, you probably remember Viant because they were a competitor of Zephyr.
And we backed SourceFire.
Yeah. So, so this guy Bob Jett, right, came out of Cambridge Technology Partners, started this company Viant, and then 5 years, fast forward 5 years, he's starting Opteros, and it's all about helping enterprises, corporations figure out how to leverage open source. Because a lot of companies want to take advantage of it, but they don't, they're a little scared of it, and especially the bigger the company and the more traditional, the enterprise, they don't really know how to do that. Startups are leveraging open source like crazy, which is a fantastic thing because they need to raise less money. And so they can actually, own more of their company and, be using very effective technologies. But there are many examples of I think, successful opportunities to build a commercial model around open source.
Around services, certainly there's been successful businesses in that aspect. I think the farther along you move your services, quote unquote, business into software as a service is the new buzzword, or as more of sort of a repeatable, scalable operation that's more product-like in basic terms, the more value it's going to bring, the more revenue it's going to generate, and the sort of more profitable it can be eventually. So I guess probably on one end of the spectrum is a pure consulting where it's almost 1-to-1 ratio, and then some type of manager, some type of ongoing recurring theme is what's attractive about a services business. So the more you can sort of replicate those things, the greater value it is and the more attractive it is for potential investors.
If I could just add on with kind of a funny anecdote, a real life story. So 2 years ago, met these guys that were out of AtStake. And AtStake and my company Garden had been kind of head-to-head competitors at one point in time. And, so we sort of took the meeting and I sort of had my guard completely up, right? Don't like you, not going to like this idea, not going to like anything about it. Couldn't sort of, and so they came in and they said, so we have this technology, worked on it for a long time. It was fairly robust and mature technology, which is not something that we always see in first meetings, with smart technology people. But they had worked on it a long time. It was patented, for Christ's sake. And they were having trouble getting it funded because they were positioning it as a tool, right? It was basically a binary analysis, vulnerability, ability to find vulnerabilities in large code bases by looking at binaries rather than source. But they were positioning it right up against source code tools. And so, VC after VC after VC had passed on this thing because, quite frankly, if you already have the source, right, why do you care whether you're looking at binary or whether you're looking at source, right? You own the source, right? So you're going to buy a tool, you might as well buy a source code tool. But the reason I got really excited about it was because I looked at it from the service perspective. You could never start a services company where you're asking Fidelity to ship you their source code for their trading application, which contains their super secret algorithms that they think make them better than Schwab, because they're not going to do it. But if you all of a sudden are offering them a scalable, incredibly comprehensive, low false positive way for the first time to find vulnerabilities in 8 million line of code base,